investors are bracing for another busy day of earnings. They're also looking ahead to that Fed rate decision that comes as well this week. Joining us right now is Sylvia Jablonski. She's the CEO and CIO at Defiance ETFs. And Sylvia, I was thinking as we headed into this week that really it was the earnings that were going to be all important. But based on the data that we got yesterday, that Fed decision is starting to loom a lot larger.
Yeah, good morning, Becky. I would agree with that. I think that there's a lot of uncertainty and nervousness in the market in terms of what the Fed is going to say today about the future path of rate cuts. You know, now the market's pricing in basically one cut around November. And, you know, as we know, we came into this expecting a lot more than that. I think 3 was the lowest number we had, you know, the first couple months into the year. So if the Fed turns out to be hawkish again and you know, talks about potentially no rate cuts or even rate hikes, then, you know, we're going to have a lot of potential pullback in the markets. I don't expect that to happen, though. If anything, I think he'll kind of level off and keep a neutral tone today.
The bigger issue, though, is what's causing the Fed to feel that way. If inflation is actually much more persistent and stronger than anybody had been guessing, that's the type of thing that causes lots of panic and the potential for people to say this is not the year we thought we were going to get.
Yeah. And if you look at the data, you know, CPI was a little bit too hot. Jobs were a little bit too hot. Manufacturing came in well. And, you know, that's certainly worrisome for the Fed. And so, you know, I think there are a few data points that are going to come in through the rest of the year, which will really lead them to their decision in terms of whether to cut or not. You know, it really has been a couple of blips, though. Inflation has been downward trending. And we really need a few more months, I think, to suss that out and see if that's really the case. But to your point, if we don't see that happening and we continue to get hotter reads, you know, particularly with geopolitics in the background and oil prices and things like this, then we might be holding at this level for a little bit longer, and that might put some pressure on stocks.
What's your decision right now, at least? What do you see happening over the rest of the year? Is this a time to sit pat? Is this a time to go ahead and buy in while the other people look a little nervous?
Yeah, I'm always a buyer when people are nervous. You know, 2022 was a big AI gathering year for me. And I think this year I'm thinking about, you know, what's the next AI, and that's going to come in the form of, you know, quantum computing. So all of these Mag 7 stocks that are, you know, reporting, well, I shouldn't say all of them, but the Microsoft, Google's, Amazon yesterday, you know, they're winning on the AI trade. They're showing some momentum there. And then on top of that, they're going to be part of this new quantum computing innovation. And so when markets pull back, you know, 10-year goes too high, you get pullbacks on these tech stocks. And I just consistently, you know, dollar cost average into these stocks over time and hold on to them forever. So that's my plan. You know, this last month was a good asset gathering month in that sense. And then diversification, right? I mean, you look at these weight loss drugs, healthcare pays nice dividends. They're seeing nice revenues, Eli Lilly, things like this. It's always good to have some diversifiers in your portfolio as well.